Good morning, traders. This is Perry Wilkie with StartupTrading.com. It is basically 9 a.m. Eastern Time on Wednesday, September 3rd. So the title of the video is SPX Iron Condor 6370 to 6450. And just to let you know what that is, when you look at the positioning sheets that I send out in the morning for today's expiration, you can see there's 10 to 11,000 puts that were sold between 63.70 and 63.75, and then there were 10 to 11,000 calls that were sold between 64.45 and 64.50. And you can see that there is a large gamma strike right there at 6,400. So as we look at, and one thing I always like to do is watch the mid price of this area. So this is basically an 80-point range. So the midpoint of this would be 64.10. So again, that midpoint's going to be above the 6,400, obviously, by 10 points. So we'll have to see, um, which way it shakes out. So a lot of times you'll end up reverting back to the middle of this as a scenario, and you'll just oscillate around the middle of it in a very frustrating day. You can also potentially fade the ends. We'll get more into positioning here in just a minute or so. As we look at where we're at, right, we hit that call wall at 6,500 last week. We kind of petered back off of it since then. And then as you look at all the, just a little cleaner one time framing chart or positioning chart, profile chart, if you will, on the dailies, you can see that, we went down to where those stops were again at that 23,060 level and just, uh, you know, couldn't break through it. So again, that's one, two, three, 4, 5 days of that being the low on the session. So again, that's where the stops are under there. So you have to be careful now if you get back to that level. You can either hands off or whatever, but there should be a little bit of a bigger flush that would come for violating those now because there's more people that have potentially have stops under there, and you can see the same thing with the ES, 4 days of 1, 2, 3, 4, maybe 5 days isn't enough to hold up now if you violate that again, right? You have potential some shorts trapped from these days, but you have 2 to 3 times more longs now above those levels. Excuse me. Sorry about that. So as we look at where we're at, right? We're already above yesterday's high, and the split was on here yesterday at 64.28, basically in the ES. Overnight has pulled back down to that. So think of this as an auction above or an auction below. And it's pretty clear that was also yesterday's high of the day for the bell zone. So as we look at that, that's one of your fade potential marks or what not. And then you can see it's a little bit sloppier for the NASDAQ overnight, but you can still see that, that was resistance, that line. So I still think it's fairly decent, this 23,342 area that you were trapped above it, and then you flipped, and now you're long above it. So, under to above. Uh, Clearly support and resistance. So that's going to be one of the markers for today as well. So let's get into more of the positioning. So just looking at the 1 day expected move and that iron condor that is on the cash market, right? So I'll blow this up just for a second here. So as we look at, I've got some green and some red shaded areas. Those are your, that's where the iron condor is, the upper and the lower limits of that. And again, 64.10 is right around where that midpoint would be for that. And, the cash market is closed right now, but if it were open, we would be right up around this upper zone. So this doesn't mean that this iron condor is going to hold, right? So what can happen is the person with this or the institution with this position, they would have to flip it into long calls to defend this position above it potentially. So they can this won't be something that someone holds till expiration. They can flip this out during the day. So we'll know if they're adding to it or subtracting from it. Right, this is a larger player. But keep in mind this is where we are, and the 1-day expected move, and you can see why the trader put this on. The 1-day expected move high was right below the strikes that they chose for that. And then, in the last 2 to 3 sessions, those highs and lows have been violated, and with, you know, trades not letting up on either side of them once they're violated. But they didn't really run away from them either. They just were, playing keep away basically. So if you look at these dash lines again, we're at the high of the expected range for the day. So we'll see. What you need to see now is you need to see this VIX dropping below yesterday's low uh, to confirm that we're going. So that's going to be right around 17, 35, if you will, that you need to see the VIX going down below. And as if you look at, all these, we're right here. So 570, lots of easy markers for today. 570 on the Qs. You've got the, you know, 643 to 645 on the SPY, and you've got that, 6450 area on the cash market to see if there's any fade or not. So I'm going to let the market open up a little bit this morning. I'm going to watch the VIX. I'm going to see if we get ads or not around, that we're at the top of the range. I'm not going to be too interested, and to be honest with you, unless you're just chasing opening range momentum. Uh, the better plays have been, uh, later in the afternoon, in my opinion. They've spent hours setting up, so you could almost walk away now and come back after lunch, and I think you would have a better day trading than you would trading the morning session. That's the way it's been the last 3 or 4 days. We'll see if that continues or not today. We'll see what Jack's looking at next, and I'll talk to you tomorrow.